All right, we look to be at a fairly steady number there. So welcome everyone. My name is Tracy Marshall. I serve as the Division Director of the new Paid Family and Medical Leave Insurance Division here at the Colorado Department of Labor and Employment. Before we get started, I do want to thank everyone for their flexibility in our somewhat last-minute change to make this a virtual-only format. And I do want to thank our Workforce Center partners, the Northwest Colorado Council of Governments, Economic Development District, and the Summit Chamber for helping us to get the word out about our statewide town hall series. Specifically, I'd like to give a shout out here to Rachel Tuin, who is our director, to Elizabeth McGarry, who's with the Summit Chamber of Commerce, and then to Carolyn Tucker and Mark Hobidzel. I hope I said that name correctly, Mark, and apologies if I didn't. And they're with our Workforce Center. Joining me today with the FAMLI team, I have Policy Unit Manager Evan Grimes, Customer Success Branch Manager Jade Humphreys-Graves, Jessica Smith, who is our Communications Manager, and Michelle Berry, who is our Communications Strategist. So some of them will be working behind the scenes just to make sure that as questions come in through our Q&A, we make sure that we will have time to address those at the end of the meeting. So on our agenda for this afternoon, we are going to take a quick walk through and look at what FAMLI is. We'll show you the timeline for our rollout and launch. We'll let you know when your employees can anticipate using FAMLI. We'll look at the funding structure and also how you calculate premiums. We will take a look at our private plans along with our rulemaking process and also what options are available for our local governments. So in quick overview of the program itself, FAMLI will provide paid leave for Colorado workers to take care of themselves and their loved ones during certain life events. The program will cover almost all workers in Colorado, including those who are self-employed. The FAMLI program is a social insurance program with both employers and employees contributing to the fund that will eventually pay out benefits. The premiums are set to 0.9% of the employee's wage, with half of that being paid by the employer and the other half paid by the employee. The initial FAMLI premium rate is fixed at that 0.9% through 2024. For 2025 and beyond, the director of the FAMLI division can set the premium rate according to a formula which is based on the monetary value of the fund each year. FAMLI premiums are capped at 1.2%, and that's per the statute. It has been demonstrated by several other states that premiums have decreased and benefits have been able to increase over time. So looking ahead in our implementation timeline, later on this fall, we will be deploying our online employer services portal, and that's where employers will register with the division, and this is where they will also submit premium payments and quarterly wage reports. My FAMLI Plus employer will operate in a similar way to my UI employer. We'll be inviting local governments, TPAs, and employer administrators to register in the system in phases in order for us to provide real-time support throughout the registration process. And we are going to be beginning that very slow rollout starting next week. Starting on January 1st of 2023, you'll need to have your payroll systems set up to start deducting premiums from your employees and subsequently remitting those payments along with wage data within the My FAMLI Plus employer system. Every employer will need to register with My FAMLI Plus employer by the end of that first quarter of 2023 before the first premium payment is due on April 30th. We will be offering a 30-day grace period for the first payment before it's considered late, as we do want to make sure we give employers plenty of time to get comfortable using the system. And then on January 1st of 2024, that's when your covered workers can start to begin submitting those requests to take family leave. So looking ahead to January of 2024, when workers are able to submit their leave requests, FAMLI will provide 12 weeks of paid leave for Colorado workers to take care of themselves and their loved ones. Those who experience birth complications may be eligible for an additional 4 weeks, which would take them up to a total of 16 weeks. Covered workers will be able to apply for family leave benefits during certain life events that could include their own serious health condition, taking care of a new child, including those that were added to a family through adoption, foster placement, taking care of necessary arrangements ahead of a military deployment, or to deal with the immediate needs and impacts arising from intimate partner violence or sexual assault. The program will cover almost all workers in Colorado, including those who are self-employed. So FAMLI is a voter-approved initiative. It was passed in the ballot in 2020, and it will be funded by both employers and employees. Employers with 9 or fewer employees are not required to pay the employer's share of their premium and will only have to deduct and remit that 0.45% employee premium from their workers on a quarterly basis. Employers with 10 or more employees will share in the cost by matching that 0.45% premium. Employers may also choose to cover the employee premium as an additional benefit if they wish. Every employer, regardless of size, will be required to register with the FAMLI division. Self-employed individuals may voluntarily participate in the program. They would also pay that 0.45% premium. I'm going to pass you over to Evan to dive into things a little more deeply.
Great, thank you, Tracy. So first, I'd like to briefly discuss with you the definition of wages, as well as the wage cap for premiums. We've recently proposed an update to our premiums rules to make FAMLI even simpler for our employer community. In that update, we have defined wages that are subject to premiums under the FAMLI program to mean the same thing as wages under the unemployment insurance system. And regarding premiums, premiums are paid on wages up to the federal Social Security wage cap. Keep in mind that this number is not set in stone. So as the Social Security wage cap changes from year to year, so will the FAMLI wage cap for premiums. And you can find a list of payments that are considered wages on our website at the link in this deck, and we'll drop that link in the chat as well. Next, when it comes to counting how many employees you have, your employer count will be calculated once a year by counting the number of employees who are employed during 20 or more calendar work weeks in the preceding calendar year. So in 2023, employers that report having 10 or more employees who are employed during 20 or more weeks in all of 2022 will be required to pay the full 0.9% premium amount for all four quarters in 2023. And of that amount, they can deduct 0.45% from their employees' wages as a contribution toward that amount. And employers that had 9 or fewer employees who were employed during 20 or more weeks in all of 2022 will be required to pay a premium amount of 0.45% of all 4 quarters in 2023, and they can deduct that entire amount from their employees' wages. Employees on paid or unpaid leave, including sick leave, medical leave, leaves of absence, disciplinary suspension, etc., are counted as being employed during those weeks, so long as the employer expects the employee to return to active employment. Now, here's another way to visualize this 20 calendar week concept, and we have a few examples here. Our first 2 people are seasonal workers, and both work during 20 or more weeks throughout the calendar year. And it's important to note that they both work intermittent schedules throughout the year, and the 20 weeks requirement does not have to be consecutive. Worker 2 may even only work 1 or 2 days a week on a rotating schedule, but because both of these workers hit that mark of being employed during 20 or more weeks throughout the year, they would be included in your employee headcount. The third worker, a full-time worker, also worked for more than 20 weeks. This person would also be counted, even though, as you can see, this worker left the company in August. The final full-time worker in the red box, and let's pretend this worker was hired to replace our last worker, would not count toward the total head count since he only worked during 19 weeks in the year. Another question we often get asked is how to count remote employees. So as you can see on this graphic, if the employer has more than 10 employees, even if they work outside of Colorado, the employer will still be responsible for paying that full 0.9% premium for its 3 employees who do work in Colorado. And then next, the same concept applies to national employers who have employees all over the country. As you can see on this map, because the employer has 15 plus total employees, that employer will be required to pay and remit the full 0.9% premium for its 8 employees in Colorado. And again, that employer is entitled to deduct up to 0.45% of their wages to contribute toward that premiums obligation. Now let's talk about what FAMLI will look like for employees once it's up and running in 2024. Here you can see a few ranges of what premium deductions and benefit payments will look like based on an employee's wages. When taking eligible family leave, employees will receive up to 90% of their wages in a wage replacement benefit based on a sliding scale, meaning workers earning lower wages will qualify for a higher percentage of wage replacement. Now, please note that the benefit amount is capped currently at $1,100 per week. This cap will be in place through the end of 2024, but starting in 2025 and annually thereafter, the benefit cap will be adjusted proportional to Colorado's average weekly wage. And again, we do have a calculator on our website to help families get a rough estimate of both their deductions and eventual benefits payments. Now, before we dive more into private plans, we do want to emphasize that nearly every Colorado employer will be required to provide a robust paid family and medical leave program, whether they participate in the state-run family program or secure an equal or greater private plan. The only employers who aren't required to provide an equal or greater paid leave program are federal employers with employees in Colorado, some railroad employers, and local government employers who vote to opt out. Now, here's a bit of detail on those few options. First, regarding private plans, private plan employers will have the option to get their private plan approved by proving to the family division that their private plan will be in place by January 1st, 2024, and will provide equal or greater benefits than the family state plan. Self-insured plans are a subset of private plans and will need to follow all the same rules and provisions to get approved by the division, just like other private plans. The only difference being these employers will also need to secure a surety bond in order for the division to vet the financial standing of the company. And then finally, as I mentioned, local government employers are the only employers who can truly opt out of the family program and not be required to provide an equal or greater private plan. The family statute was written to give local governments this flexibility, which was also outlined in the ballot measure. Now, our proposed private plan rules have not yet been adopted. After gathering extensive feedback from various stakeholders, we recently filed and published our proposed private plan rules. You can review the complete set of proposed rules on our rules page, where you can also submit a public comment. This is still subject to change until the rules are adopted. But in order to qualify for an approved private plan, employers must offer a plan to all employees that provides all of the same rights, protections, and benefits as Colorado's paid leave program. So for example, in order to be approved, a private plan must offer at least the same number of weeks of benefits, offer at least the same level of wage replacement for each week of benefits, include no additional requirements or conditions, deduct no more from employees' wages as they'd be authorized to under the state plan, cover all employees through the duration of their employment, and of course, remain compliant with any additional requirements established by the family division. Now, we understand employers need time to shop around and consider their private plan options, and that can't happen until the private plan marketplace opens up after we adopt our private plan rules. Therefore, all Colorado employers will begin paying premiums in 2023, and those who secure an approved private plan that's effective on or before January 1st, 2024, will be issued a refund of paid 2023 premiums minus a private plan administration fee within 90 days of approval. We anticipate opening up the private plan marketplace sometime between Q1 and Q3 next year, at which time we will provide more guidance on how to apply for private plan approval within My Family Plus Employer, our online portal. The deadline to submit a private plan application and receive a refund for 2023 premium payments will be October 31st, 2023. But the biggest takeaway here is that all private employers will begin to pay premiums next year while you shop for private plans if you so choose, and then you will be refunded if you obtain a private plan that is submitted and approved by the division. Next, I want to give an update on our rulemaking process. Benefits rules are now adopted, and our proposed private plan rules have just been filed and are published on our rules page. The formal public comment period is now open, and a virtual public hearing is set for October 17th at 5 p.m. Notices of all public hearings are posted on our rules page, where you can also read all adopted rules, proposed rules, and listen to past public hearings and submit public comments via our online form. And earlier this month, we filed 3 sets of rules that includes coordination of benefits and amendments to our premiums rules and our local government rules. The virtual public hearing for those rules is set for November 1st at 5 p.m. And finally, I want to talk briefly about local governments because unlike private employers, local governments have unique options available to them when it comes to their participation in the family program. And here are those 3 options. The first one is to simply participate in the family program. This means the local government agency agrees to pay the employer share of the premium. That's 0.45% of wages if there's 10 or more employees, and 0% of wages if there's fewer than 10 employees. The employer would also agree to remit the employees half of the premium, along with wage data to the family division once a quarter. The second option is to decline all participation in family. In order to do so, the local government's governing body must take a vote. The local government must then notify the family division of their vote to decline participation. The decision to decline participation is good for 8 years, and the local government must hold another vote if it wishes to continue opting out beyond 8 years. And employees in this scenario will have the option of voluntarily participating in the program, but they would be responsible for remitting 0.45% of their wages, along with remitting their own wage reports to the family division every quarter. And the final option here is to simply decline employer participation in family. If the local government votes to decline, it still has the option to assist its employees who want to individually participate in family. This means the local government would facilitate voluntary payroll deductions, remit the employee's share of the premiums, and submit wage data once a quarter to the family division on behalf of those employees. And now I will hand it back to you, Tracy.
Thanks so much, Evan. So just to wrap things up, we will definitely direct you towards all of our online resources. We have an HR fact sheet, a local government fact sheet, and a sample pay stub. They can be found on our employer toolkit page. We're also planning to add more information and resources as the family program continues to grow and progress. You can estimate premiums and benefits using our online calculator. We also now have a complete local government guide, along with a poster and a sample written employee notification on the local governments page of our website, which is at family.colorado.gov. Just take a look for the local governments button on the employer page. If you work with a third-party administrator and want to be sure that your TPA is set up for success, we do have a page which is dedicated to TPAs, and that has our file specifications and some sample files. Also, they can be found on the website. We do really want to hear from you. You can engage with us in a variety of ways in addition to participating in these webinars and our public hearings. Our email address is shown on your screen. You can also be alerted to ongoing updates by following us on social media. We can be found on Facebook, Twitter, Instagram, and LinkedIn. And you can also subscribe to our newsletter, which again is linked on family.colorado.gov. So right now I'm going to pass us over to Jessica, who's going to serve as our moderator to make sure that we get through as many of your questions as possible today.
Thank you, Tracy. I'm going to start here with Joe. Joe has a question about the notice for local governments. Joe's asking if we have a sample of that notice on our website, and the answer is yes, we do. We have a local government poster that is generic and has language about what to do if your local government has opted out, but we also have an employee notification that local governments can customize to your needs to use as that employee notification that you can either post or send out via email. I have included that link here in my response to you, Joe, so I'm going to send that via the Q&A. And there was also another question in from Lorraine about how do clients start receiving emails, and I'm interpreting clients to be individuals and families. Lorraine, I have responded with a link to subscribe to our newsletter. On that newsletter subscription, you can choose which topics you would like to be notified on. So employers can subscribe and hit the employer notification, or you can click the individuals and families and get notifications for when we start really pushing out notifications to individuals and families once benefits become available. Now let's get to Wendy. She has a question about remote employees. If the business is based in Colorado and the work they do is in Colorado, but they work exclusively in a different state remotely and their state taxes are only paid to that other state, do they have to pay the premium?
I'm happy to take that. Basically, if someone works completely outside of Colorado, then they are not covered by FAMLI. Therefore, the employer doesn't have to remit any premiums for them. The employer can't deduct from them to contribute toward those premiums, and that person would not be eligible for any family benefits.
Thank you, Evan. We have another question here about localization from Beth. A Colorado employer has 15 employees, 14 in Colorado, and 1 out-of-state resident working remotely for part of the year. Is the out-of-state resident employee subject to family deductions and eligible for benefits?
Nope, they are not.
Thank you, Evan. And here's another question from Joe. I'm not clear on the distinction between payroll deductions and quarterly payments. Are payroll deductions remitted to families starting in January 2023, or are deductions retained and then paid quarterly? Or are the quarterly payments for self-employed or independent contractors, or for reporting quarterly summaries by an employer?
So if I understand the question correctly, payroll deductions are authorized to begin immediately 1/1/23. The employer payment of premiums to the division happens on a quarterly basis. So if the employer chooses to deduct up to 0.45%, of their employees' wages to contribute toward its quarterly premium obligations, it gets to do so, and it does so throughout the year. But its remittance to the state of the premiums amount happens on a quarterly basis. Tracy, did I miss anything? Is there anything to add to that?
Oh, I think you got it, Evan. Thank you.
I will just point out that there is a requirement, Evan, you can correct me if I'm wrong, but when it comes time to pay your quarterly payments to the division, you can't retroactively deduct from your employees. So if you are going to make that deduction from your employees, it needs to start on 1/1/23 and can't be retroactive.
Good call out.
Right.
Yes.
That's super helpful.
Okay, we have another question here from Melissa. If you have 3 different companies, which you are self-employed, but receive a W-2 from each company because of tax purposes, would we be able to claim from all 3 companies if Colorado is collecting money for all 3 companies?
This sounds like a question from a self-employed person who has 3 different sources of self-employment, 3 different businesses. And so this person sounds like if they're self-employed, then it's optional for them whether or not they want to participate in family. They would have to elect coverage to do so, and then they would have to stay in the family program for 3 years after the election of coverage. But if they do elect coverage, then they would have to report their income from all 3 of their sources of self-employment, and then assuming that an absence would require them to not be engaged in any of those sources of employment, we would calculate all 3 sources, or we would use income from all 3 sources in calculating the benefit amount. If that's not responsive, if I missed the point, Melissa, please raise a hand or drop another question in the chat.
Thanks, Evan. Since we do have a lull in questions, I'm wondering if you can describe a similar situation, but for someone who has multiple employers, not necessarily self-employed, but they have multiple jobs. Their payment from each of those employers would be deducted. Those employers would be contributing, and I'm wondering if you could explain that angle of it.
Sure. I mean, as far as premiums deductions, every one of your employers, so long as you're subject to Colorado FAMLI, is required to remit premiums on your behalf and is allowed to deduct from your wages to contribute toward those premiums up to 0.45%. As far as leave goes, if you take leave and you need leave from both jobs, then we would consider your average weekly wage from both jobs in calculating your benefit. If you needed to only take leave from one job and not the other for your particular condition, then we would only look at the average weekly wage from the job that you're taking leave from.
Thank you, Evan. We've gotten through all of our questions in the chat, so feel free to raise your hand and I can unmute you, or you can type out an additional question. Since we do have a little of a break, I'm going to launch a poll for our participants to answer questions from us. This is basically asking if you plan to participate in the state-run family plan, if you're a private employer, or if you are considering a private plan. And if you are a local government employer, we'd love to know if you plan to participate in the state plan as well. So I'll leave that up for you all to participate in. Looks like we have another question in from Beth. She's asking to confirm out-of-state residents working part-time in Colorado are not subject to family.
That may not be true. If someone has a part-time job that's entirely in Colorado, it doesn't matter where they live. It matters where they work. It gets a little trickier if for this job they work part-time in Colorado and part-time outside of Colorado. If that's the case, let me know and we can go into those weeds. But if you work out of state and you cross into Colorado to work 100% for your part-time job in Colorado, then you're going to be covered by FAMLI.
Thanks, Evan. Got about 60% who have answered our 2 questions. So I'll give it a little bit more time for the rest of you to join in. Meanwhile, feel free to raise your hand, ask another question. Okay, Beth asked, could you clarify, they work part-time out of state for a Colorado employer and part-time in Colorado for the same Colorado employer?
Great. I like it when questions get a little more complicated. So in this circumstance, if they work, they're working for a Colorado, they're working part-time out of the state and part-time in the state. The first question is a question of degree. If they primarily work in Colorado and it's only just incidental work outside of the state, then it's easy. They're still covered. If they don't work primarily anywhere and it's more, akin to half and half, then we have to look at where the employer's base of operations is. So in that situation, if you work half in Colorado, half in, say, Wyoming, and therefore you're not localized in one specific state over the other, but your employer's base of operations is located in Colorado, then you would be covered under FAMLI.
Thanks, Evan. Just taking a look at the poll here. But just over half have participated. I will go ahead and end the poll and share those results so we can review. Of the private employers we have joining us today, it looks like we've got about 7 of you planning on participating in FAMLI, and about 6 who have not decided yet. So hopefully this presentation and some of the materials we're putting out are helping you to determine that decision. And for the local governments participating, looks like we've got just a handful of you, and it looks pretty evenly split between yes, no, and we have not decided. So good information. Thank you for sharing that with us. And for those that are undecided, please continue to ask your questions. Let us know where we can direct you on our website for more information. But I'm sure that with everyone. Right. If we don't have any more questions, I'll give you guys back some time to enjoy the lunch hour. Tracy, Evan, is there any other closing comments you'd like to add?
Just to say thank you. We really do appreciate your time. We appreciate your questions, especially the difficult ones. And those are the questions that are going to help us grow and make this program as usable as possible for all of you. So thank you.